Despite Madrid's efforts to recapitalize the banking sector, two of Spain's largest banks, Santander and BBVA, have suffered a downgrade of 2 notches from A to BBB+. Rating agency Fitch has said that these adjustments were a result of the downgrade of Spain's sovereign debt. This downgrade places both the banks just 3 levels above the junk level. The rate cut comes after Spain became the 4th country in the European Union to accept a bailout package of €100 billion to help its ailing banking sector. Many feel this is a prelude to a state bailout for Spain. Joanna Partridge at Reuters files this report.
A baptism of fire. Luis Maria Linde is sworn in as the new governor of the Bank of Spain, just as the country's banks were about to receive a financial rescue package of up to €100 billion. The markets were initially relieved, but investors' euphoria soon faded as they began to question the impact of the bailout. That pushed Spanish and Italian bond yields up again. Bondholders are now worried the rescue will only add to Spain's fast-rising debt.
Whilst the bailout is absolutely necessary, it doesn't really fix anything in the long term. It's almost like it's a plaster made out of banknotes, essentially, whilst you need a much stronger fiscal surgery that's required both for banks and the Spanish economy as a whole, because of course you've still got unemployment 1 in 4. So from that perspective, there are still a lot of uncertainties in terms of the medium to the long-term picture.
Spanish Prime Minister Mariano Rajoy had insisted the money for the country's banks came without political conditions. But on Monday, EU and German officials said Madrid, like Greece, Ireland and Portugal, will be supervised by the troika of international lenders. It now looks like Spain might not be the only country to request a bailout this month. Cyprus, which is deeply exposed to Greece, strongly hinted that it may also apply for an international bailout for its banks and the state.
Greece think of this bailout without the austerity measures, and you've also got stories coming up to this Greece election that some of these Greek parties are looking for ways to exploit this Spanish bailout for the Greeks. And then we've still got the issue that when we get to this Greece election and it comes out whichever way we think it's going to come out, that we still have got exactly the same problems, that Greece may not be there.
Even if this bailout ends Spain's banking woes, the country's still in recession and struggling with austerity, high unemployment and high levels of debt. And that means many fear the money to rescue Spain's banks just won't be enough.